Good morning, traders. Richard here doing quick Ichimoku cloud chart market review of the NASDAQ 100 futures contract, the E-minis. We had a fantastic rebound from this 20,650 support, then snapped back up, ran into trouble here, the 21,032 upside resistance target. Was hoping for the market to break through that, and then the upside targets to that would be the bottom end of the cloud as well as this resistance range. But we had a huge reversal as Trump's tariff tantrum is impacting markets now. We're back below this support zone, got pretty close to this 20,279 and 20,222. And if we look at this bottom end cloud level there, that's another critical support zone. So index rebounded so far from that 2324 zone. Not out the woods now. Do remember that price action below the cloud is bearish, so the trade we're trying to do here is either go short the resistance and buy the swing trades back at the support levels. And then we're also looking for kind of a mean reversion trade of this whole move to go back up to the bottom end of the cloud. So that's kind of the strategy in terms of the swing trades. You've got to go long and short depending on which level we are at. Could still see these levels being tested today, and if this significant support zone breaks, then we're looking at 19,945. So do know that price action below the cloud is ultimately bearish, and trying to swing trade these rebound rallies is incredibly difficult from a Ichimoku cloud chart perspective. Let's take a look at the 4-hour Ichimoku. Here we go. We had a nice little rebound rally there, only to run into trouble there at this 21,032 resistance zone, as well as the standard line of the Ichimoku cloud seems to be a key resistance zone now, and the turning line as well. So it looks like we're struggling to get past this resistance zone, let alone the bottom end of the cloud. Watching out for possible support to come back in at this level, and any kind of positive move to the upside would then activate these resistance targets to the upside. If we look at the hourly Ichimoku cloud, you can see briefly above the cloud, got a little bit bullish, was keen on further follow on trades, but then sliced through the top end of the cloud, sliced through the bottom end of the cloud. So these were all short selling signals on the hourly. And then a strong rebound from that support level there, this 2324 zone. Now it's kind of moving sideways. Maybe it's going to retest this low before trying to get back up to the bottom end of the cloud resistance zone. But bearish on the 60 minutes. For this rally to be very strong, we need to be back above the top end of the cloud there on the hourly. Bearish on the hourly, bearish on 4-hour. With these downside risk targets as the downside targets, and then on the daily also bearish. So watch out closely. Cash is about the best place to be from a medium-term perspective, and then we're looking at shorter-term swing trades, rebound rallies from these levels. Gets back up to resistance, looking at shorting opportunities, and get back down to support, looking for quick swing trade opportunities to the upside. Now, if we take a really big picture perspective where we are on the weekly, so there's downside risk to the top end of the cloud here on a weekly Ichimoku cloud. This front end support there, front end of the cloud, is kind of a line in the sand. So we could still test this 20,135 zone, as well as this 19,945 zone there. So these are two critical downside risk targets. We've got 3 down weeks, could see a 4th week similar to this kind of price action where the market wants to get very close to the top end of the cloud to rebound. So I think we're probably going to hit the top end cloud chart support zones between 20,135 and 19,945 this week. So on the weekly, could short the current rally right down to the support zones, and then a swing trade rebound rally from that on a weekly. But so far, the overall big picture is, as long as price action stays above the top end of the cloud, yeah, this rally should be okay. We just need to get through a difficult period in March, depending on the outcome of the tariffs. And then on the daily, look for potential support to come back into swing trades, that back up to resistance zones, and then shorting these resistance zones to the downside. But keep an eye on the 4-hour and the hourly for any kind of positive improvements there for the rebound rally. But in the meantime, shorting the rallies and buying swing trade the support back is the trading strategy on the Nasdaq E-minis. Until next time, happy cloud chart trading. Bye for now.